JJ the CPA here. Hope you're doing well. Want to do a special update for the sole proprietors and the self-employed to let you know that, boom, get ready. April 10th, you should be applying. If this is April 11th, 12th, or thereafter, you should have applied. You need to apply. Let's go, let's go, let's go. So here's the thing on the special update is that we are knowing this. You are going in with your Schedule C. You are not going to be able to base it on 2018. You need to have a Schedule C. It will need to be based on the activity of 2019. You can go to irs.gov, search Schedule C, print that baby out or fill it out, and what you're putting in there is your income and your expenses. It's that simple. What's your expenses? The expenses related to your business. But here's the thing. You need to get your butt in there, okay? ASAP. I had a video on it yesterday, but here's part of the update is that when you're looking at your Schedule C, okay, and you're looking at what your expenses are, what you need to consider is that an expense that you need to take in 2019? Meaning, you're not required to take every expense. If you have expenses on there, such as home office, mileage, depreciation, okay? These are three things that, no offense, I don't work with many clients that have Schedule C. I'd probably say none of my clients have Schedule C, but I've been around the block, been doing this for like 27 years. And usually, when you're doing the Schedule C, you're pulling from all kinds of areas, right? You may not have yourself a QuickBooks, but you're pulling a receipt from here and then there and pulling one over here and pulling one here. Oh, and I got a receipt under here. Well, I think I got a receipt there. And then, well, does that count? And does this count? And that count? And does this count? Okay. Boom. Yes, you want to take all the deductions that you can, but let's think for 1 minute. The net on that Schedule C, line 31, determines your PPP. And if for 1 second you think I'm advocating at all to cheat the system, I am not. What I'm saying is quite the opposite, okay? So here's the deal. If you're the IRS, do me a favor, just go to the next video. Shh. Just go to the next video. It's cool. Don't worry. Okay, yeah. Okay, go. All right, cool. I got it. You ready? Okay. Most sole proprietors and self-employed individuals, they're wonderful people, but then when it comes to tax time, they try and find a lot of things to write off, and they're pulling all kinds of receipts out. And then they're like, well, can I write this off? And then can I write that off? And what about this? And what about that? Right? Maybe this is just not the year to do that. Maybe it's just the year to take only the expenses that are clearly deductible. What? Yeah, I'm being serious. Hey, get around the corner. I told you. It's okay. Listen, so when you're running a side business, you can't write off your whole house. Your kids are not employees. Okay, that couch, it's not really a write-off. Okay, when you're driving to the store and you bought a pencil, probably can't really count those miles. When you're driving to the bank, probably can't really count those miles. Shh. You want to really now pay attention, and actually, I'm not saying you're doing anything wrong. Not saying that at all, okay? You're a good, God-fearing American. You're doing it right, okay? But maybe this is the year to not do it right. By doing it right. You hear me? You know what that wink is? Don't take the crap BS deductions. Oh, I bought that. Can I write that off? Usually that's for starters. No. When you have to say, can I write that off? It usually means no, you can't write that off. Okay? This is what I've been telling my clients for years. I call it the smirk test. It's a smirk test. I'm like, if you have to say, hey, could I write off that trip? That's an automatic no, we're not writing off that trip. Or if it's we could write that off, right? No. You know why? Because you failed the SMART test. Okay? You're going on a trip for a seminar or something like that. You don't go, can I write that airfare off? You already know you can write it off. You're going on a business trip, right? Could I do that? No. Here's my point. Do it perfectly. Do it right, right? Don't do it right. Do it right. By doing it right, it probably is going to lead to less deductions, more net income. Okay, maybe you're going to pay some more tax. But does it lead to you having some more PPP money? Okay? So you got a loss. Why? Now, maybe you want to have the loss, but now you got to pick and choose. You can't have it either or. Okay? It's not a flag, okay? This isn't 1949 where you think there's an IRS agent down there in the white shirt with the big glasses and a black tie just sitting there waiting, doing their fingers. When's that return coming across? Because I'm going to look at it. Okay? The IRS doesn't do that. These are human beings that have kids. They have kids, okay? Like, they're people. They don't care about you. They could care less about you, okay? They're just there to follow the rules. And nowadays, it's just the system. So the ones that are doing Schedule C, this is what kills me, right? And this is after 27 years of experience. You're doing a sole proprietorship. You're doing the schedule, the self-employment, right? And you're in a situation where now, I don't know if it's just fun to pretend like the IRS is paying attention to you because you're like the last person on their list. They could care less about you. They already know probably half the deductions are total BS. Okay? So all I'm trying to say is if you've got that side business, do it exactly right. Okay? Do it like you've got the priest preparing that return. And I'm a CPA, and guess what? In many circles, I have more integrity in my profession than the priests nowadays. Okay? And if not, we're second in the world for the most trusted profession. So what I'm saying is, don't have any shenanigans on your Schedule C. Because here's the deal, okay? You're not required to take deductions. You know what you're required to do? Report income. So now if your head's spinning, what I said is just do it right. Take the deductions that you are deserving of. No more, no less, right? You hear what I'm saying? I'm not advocating and doing anything wrong. What I'm advocating is do it so right that you got no smirks, you got no stretches, you got no receipts that are so old you can't read them anymore and you're pretending that there are receipts. Okay? Listen, don't even all act like, oh, it's this and that. Because there's the thing. If you're a sole proprietor, you're working your ass off. And guess what else? You do deserve every deduction that you're taking. But because you don't have a separate bank account, most of the time it gets blurred. Okay? It gets blurred and you go, hey, I bought these for the house. Can I write these off? I bought some waters for the house. I got a home office. Can I write this off? Do you have customers come to your house? Well, no. Well, then why do you need to have waters? Why do you need to have a solo cup? Follow. That net income determines it all. Yo. Follow? Are you following? You are. Of course you are. You're smart. You get it. But this is why this video is very, very much for the sole proprietor and the self-employed, is that do you need the money or not? Then make some decisions. And the decision is you're getting a PPP. And the second decision is you're going to have a Schedule C. And if you don't have it already, then you go online and you get yourself one. And it can't be that big a deal. Because at this point, you know what you're writing off? What you hardcore would pay somebody to run a business. And what do I mean by that? You had someone that came in and said, hey, I'm running this business. I need to get some solo cups, man. You'd be like, what do you need solo cups for? I don't know. I mean, it's cool to have them. You'd be like, I'm not paying for solo cups. And they come in and they're like, man, we need some waters, man. What do you need waters for? I mean, I don't know. See what I'm saying? I gotta run to the post office, so I'm gonna write those miles off. I'm not paying you for those miles. Well, I gotta run to the bank. I go to the bank twice a day, and I went to the store and bought a pencil, so I need some mileage for that. You'd be like, I'm not paying you for that. That would be kind of what you want to look at here. Would you pay somebody else those expenses? Sole proprietor, right? I'm talking about the sole proprietor, self-employed, right? You gonna pay somebody else to drive? No, you're not, because you're gonna do it yourself. Okay, you can have somebody like, hey, I'm gonna go to Walt Disney, so like, can you pay for that? $27 years. And you know what else? This is important times right now. It's not time to be trying to spend an extra 45 minutes trying to figure out how you can write off 6 extra miles. What it's time for now is getting that Schedule C done and getting it into the bank. See what I'm saying? You follow me? You dig? All right, hey, you know what? Maybe this is one of those videos and people are like, JJ's really, he's in, he's smart, he gets it. I'll be with you in just a second. All right, IRS is coming back in. All right, hey, if you would, subscribe, and then here's the deal. Schedule C, get her done. Let's go. Boom.